Hey guys, this is Simon with TRADEnPERFORM Coaching. I wanted to do the trade review of the levels and how they work for everyone this evening in a continuing effort to educate both new and experienced traders and how to help them get better at trading. So uh, what we're going to do first is go over today's charts, and then I'm going to go through and build tomorrow's charts with y'all. So people are asking ahead of time, how do you get a hold of me? How do you ask questions? How do you ask for a pass to the room? You email me. The email is trade and perform. It's TRADE. The letter N is in Nancy. Perform. PERFORM at gmail.com. You can ask for a 3-day pass to the room or anything else you'd like to ask. There's no deep secrets. I won't give you the formula to my algos, but outside of that, I'm willing to answer almost any question that I can out there. So let's get started and see what happens, and we'll go from there. I do have a camera hooked up to my computer system tonight. I don't know if it's being captured or not, but someone asked to see my face. I'm happy to show my face. And so let's get started tonight. So number one, let's go through ES, then we'll go through NQ, right? So ES, I'm going to look at it from a 24-hour perspective. So one of the things people always ask me is, well, what does it mean when the market likes to travel from algo to algo to algo, from point to point to point? I'm going to show that. So if you'll look coming into Sunday night, this here is this is the beginning of Sunday evening right here. And what that simply means is the market rotate. You can see that we opened up on Sunday evening. Backside tested this. This is an anomaly. If you go to market profile or you look at mind over markets, this is an anomaly. The market traveled from this anomaly past prior session, which would have been Friday afternoon's low, down into this anomaly right here. This is a support resistance zone. It's clearly marked as support resistance, right? Came in, rotated back up to prior day's low again. So if you read Dalton or mind over market, a prior day's low is a weak retail trading location. An anomaly is a high odds location, unless it's the prior day's point of control, right? This little blue area on my chart is the prior day's point of control. It just means that's where either the most time or the most volume occurred. And usually it's a combination of the two, as it was in this case. So the market opened up Sunday evening, came into this anomaly, rejected, came down to this anomaly. If you try to short the backside test of that prior day's low, you got smoked. That's why location matters, right? And then you came in. You'll see that we rejected out of there, counter-rotated down. It was an all right trade if you took it there. It was worth 6 or 7 points if you shorted in this anomaly, right? Then we traded all the way through the anomaly. If it's a prior resistance area or support area, once it's resistance, now it becomes support. It never gets backside tested. We push into the lower purple area is something called value area low, right? And then you can see this is the prior day's point of control overnight, where from central time we were trading prior to the open. And this makes a great magnet. It makes a very difficult place to establish a trade. And the reason why is you can't ever tell if it's going to hold the location, chop through the location, what exactly it's going to do. So we chopped pretty much all the way to US Open. We got an initial sell right out of the gate. This is pretty much 8:30. And then we went into trend day up, open drive higher. Now, I want to explain this here. I open this up. So how do you figure out that you're an open drive higher or you're trending up and you don't have any kind of fancy algorithm or anything else? So it's very simple. If you get a 5-minute bar over a 5-minute bar and you can't even trade, forget closing underneath, you can't even trade underneath the prior 5-minute bar, that's highly indicative of trend day up. And it immediately tells you two things. A, don't short, right? Because you want to see the counter rotation. You want to see the ability of the market to get below where it's currently trading. If you can't trade below a 5-minute bar, how are you going to make any money shorting the stock or going long if it's trend day down, right? Secondly, where are your targets? So again, this is prior day's high. If you shorted prior day's high here, you got stopped, just like you did if you shorted prior day's low on the backside test in early European session, right? And the target would have been this 42. For me, the target today was 42.10 to 42.15. And as if you look, we finally pushed in, and you can see that we spent all afternoon chopping through there. So two things about today. First of all, I am not the master of open drive higher. I know that it looks great to be able to have an open drive lower or open drive higher, but two things about that. A, it started from a really odd location. The whole point of having these zones, right, is because I want to focus on these zones so I can establish a place where I have very good odds. Even if everything else fails, I have very good odds that the trade will just come out of that location. The actual worst place to get a trade, in my opinion, on a chart is in between value area high and value area low. We tend to crisscross these all the time. And if you trade inside of here, you will find that you get chopped up and stopped quite often. I really want to be outside of this location. And so I just try for the most part not to trade in this location unless I just have an A+ setup. And I'm highly confident either the level lower or the level higher is acting as a target, right? In this case, the clear target up was this zone up here. We finally hit it at about 1 o'clock in the afternoon, and there was absolutely zero reason to continuously fight that particular trade. And as a matter of fact, by the time I got to 10:30, I actually did attempt to short. I used a different chart to set up my shorts, and I actually got short set up about this area right here, but it was really feeble. And I was really quite lucky just to get to break even today. So I got down initially, and I tried to make a short work up in this area right around 9 o'clock. It got stopped out. I recovered some of the money right in here. And when we got to 10:30, I was quite happy to be flat. And I have a general rule because I want to be able to stay profitable. And that is if I'm not up by 10:30 in the morning, I tend to stop trading. I don't just tend to stop trading. I stop. Why? I have very low odds of being able to recover the capital that I lost. I have much better odds or propensity to actually draw down further after New York lunch. And you can see there was simply no point in staying here and fighting this market. It just didn't do anything. It just folded one over the other. This is just nightmare trading for most people where lots of losses take place. You pretty much had to be long from the open and ride that thing all the way up. Some of the members in the room did. I did not. And I'm not a trend day up specialist, and I'm quite all right with that. So at the end of the day, we ended up testing this yellow zone in Asia, and we came all the way up to this yellow zone in the U.S. session, and that is how the market in the big picture ended up resolving itself. I want to talk about one other thing while I'm here. Let's say you didn't have the zones. People are always talking about price action. How do you figure out price action? So I want to cover that for just a second. If you look at the PA over here, what I often ask people, what are the other ways you would have been able to tell where support resistance are? People talk about structure. People talk about price action, right? So one of the things I look for is, well, where was the last swing high, right? And if you look at this going into Sunday evening, right, the last swing high is, let's see if I can grab it. It's up here, right? I know if I'm going to go higher, I have to get above this, and then this will act as support. And generally, this area, when we get to it, should, somewhere in this structure, act as resistance. So when you're learning how to understand price action, go look, right? Like, what did we look at how the market treated that whole area, right? So when you look, when we came up to the bottom, you see you got a little responsive selling over, got a little responsive selling over here from the front of the zone. You got a little responsive selling from the back of the zone. And we basically consolidated inside of resistance. Like when you look at that, we consolidated inside of resistance. But after you got above this resistance, this is the next structure, this yellow zone. See that right there? That's the next structure where there is resistance. You might argue this was a bit of resistance, but the longer a sideways type of time you spend in an area, and really this whole structure as a whole, the more likely it is to serve as resistance going forward. So if you look over to the right, you will see as we got up into that area, we kind of that's where we started to get dragged down. It really couldn't get over it, right? Additionally, one of the things I want to point out, and what sucks about that open drive higher, is really what you would have wanted is to clear above here and then have it test back. This is what I was looking for this morning, is to have it come back and test into the structure so I could grab a long and push back into this location. So this is really important. Having a great entry is more important to me than knowing where the market's going to go. If I have a great entry, what defines a great entry? A, it sets up perfectly. It gives me very low risk relative to my stop, right? And it's right on the bubble. So just like when I got in here last night and I mentioned, hey, we're right in support. This is a good location. See how I have my risk well defined? Now there's all kinds of ways I can look to getting into this trade, right? I can say, I want the first green bar that closes out of this zone. Once we close in, I want the first green bar that closes out. That would be this bar. That's one way to look at it. And then I don't want to close below the swing. I have another way that I can look at it. Once I get out of that zone and I get a low, I'm going to go and show you, because there's so many ways to chop it up, right? But if you look at this, and we're going to make it really big. So see how this bar, once you kind of zoom in there, we clearly closed into the wave, and I would call this bar what's called an orthodox close out of the wave, meaning we closed all the way into the bar. You can see this entire bar was inside that support resistance zone. This bar is the first bar that's completely outside of that support resistance zone. And once I get this bar that's completely outside of that support resistance zone, again, this is if I was simply trading off a 5-minute chart. I don't simply trade off a 5-minute chart. And I would have wanted a 50-60 back, the heavy blue lines. This is the 50 retrace. This is the 60 retrace. And I'd have put a stop right there on the 786 to get a beautiful long trade. And my goal would have been to get to this anomaly. And you can see once we got to that anomaly, again, you can see that setup. If you were looking for the short here, right? Again, you can see that same setup worked once again. You came into the anomaly, you closed into it. I didn't get a bar completely inside of here, which I would have liked, actually. So remember, as you get more and more precision in your trading, you're going to ask for more details. Why is that? Most people, when they come into day trading, they're just trying to trade everything, right? I want to have the perfect read. I want to get everything right. And what you'll learn is that leaves you at a 50-50 trader. For most people, if you don't have great risk reward, 50-50 trading doesn't work out for most people. They end up losing money, frankly, and that's just how it goes. So I try to maintain a high P&L and a high RR relative to the location I'm taking. So let's say you decided this is sufficient. You got to close in, you got an orthodox close out, and you're going to look for a 50 retrace on that, right? 50-60 retrace. So it's the same setup. You can see how we came down, we retraced into the 50-60 786 in this case, rejected out. This is not a bad trade, right? It rejected out, it backside tested, and it gave you a trade from about 41.50 back down to 41.45, 5 points. You're going to have a hard time beating an impulse move up like this, but the point is you were able to put down 5 points at 2 in the morning if you're up trading or you're trading the European session. There's nothing wrong with that. And then you can see in Europe, the buyers came in. The clear target at this point, if you're going to go long from this location, would have been the prior days or Friday's points of control. You can see we just missed the first time it retraced, right? People front ran that location trying to grab the short, and it finally pushed in. So a natural question would be, well, Simon, how would have you gotten long to get that push if you didn't get long as it was already breaking out? I've got an easy answer for that. What I need is from this swing low, I would have needed some type of 50-60 back in this direction to grab the long, and it simply never happened, right? So for me, I just missed that trade. Why? I'm interested in taking as high an odds trades with small stops as possible, and I don't chase. Now, my algorithm may have given me another way to take that trade. but I generally prefer to take trades out of retraces as opposed to grabbing them as they break. There's nothing wrong with grabbing them as they break as long as you have a management system for taking that trade. It's not my style of trading, right? So then as you come into the US session, right, so you'll see me say this all the time on my Twitter stream, right? If we're inside value area, that's a hard place to trade. Why? It just tends to sweep through the whole thing, and specifically the hardest place to initiate a trade is right inside the point of control. Sometimes it rotates off of it. Sometimes it's a good short. Most of the time it just sweeps through that area and causes stops. I don't know why you would want to subject yourself to that, but some people apparently do. You can see if you try to go long in the zone, it stops you out. If you try to short inside the point of control, it stops you out. I just tend to stay out of it. And there was never a retrace offered for me to get long the CS. The other thing I want to point out that's really important, and again, this is going to be more like a coaching session, but if you look this morning, and I'm going to break this down to US sessions only. Give me just a second. Okay, here we go. So this will load in just a minute. I have far too many days, obviously, so let me fix that. Oh, no, that's all right. Okay. So this is I want to show you this because it's important. These are 5-minute bars, okay? These are 5-minute bars. All I'm trying to show is that first 30 minutes. Look at these two markets. So ES opens up inside of value, and they begin identical, right? I want to show you this because when ES and NQ don't line up for me, the trading becomes very, very difficult. So this is NQ, and it effectively has almost an open drive lower, right? Big bar, second bar comes in, and then it grabs a reversal. But if you look, in this particular case, this is on ES, prior day's low. Remember, ES was the weaker of the two markets on Friday, right? So I try to follow a linear line of thinking. So if NQ's weaker and it was the stronger one on Friday, I'm not looking to ES to provide my leadership. Now, it doesn't matter whether that's wrong or right. I'm just saying I like my markets to line up with one another so that I know where to take risks. So picture me as a more conservative day trader. I like everything to line up in my favor before I take a trade. I want all the factors to be in my favor versus some of the factors to be in my favor. I'm not desperate to grab P&L. I've been doing this for 30 years. I simply want everything to line up so I can have a logical look. So if you look at ES, right, we had this first 5-minute bar where they were selling, but then they immediately flipped at value area low, which again, for me, that's a weak trading location. If you want to trade it, go ahead. But look at the two traders, right? One trader bought value area low in in ES, and he killed it, right? Another trader brought value area low on the same open in NQ, which was the stronger index, and they get killed, right? Again, a prior day's low is the same thing. It tends to be a weak location. Now, a trap below and a trap back in is all good, right? I'm going to say that again. A trap below and a trap back in, that's a good setup. But just trading because it's prior day's low, that's not a good location for me, right? So secondly, NQ by 840 is trading below prior day's low, and ES by 840 has recovered back almost all the way up to the day's high, right? And back to value area high. So look at the two traders. If you're a day trader and you're trying to figure this out, right? And remember, not only am I a day trader, but I'm a day trader that uses a lot of leverage, right? Why? Because I've been having series of winning trades. It's what I teach people to do. Stack winning trades, get your P&L higher and higher with the highest setups, not trying to trade everything on the face of the earth, right? So if you look at this is a very hard thing for me to figure out, right? I have over here by 850, I have ES above value area high, and by that same 850, I have NQ struggling with the backside test of value area low and back into the point of control. people who were trying to get long NQ this morning, and they weren't really careful about their location, they got smoked. There's no question in my mind that a lot of people just got torn up in NQ this morning, and you got torn up whether you were short or long. These are very large rotations. This is to open up the day. This is a 14,050 all the way down to 13,950. This is a 100 points or $2,000 a contract ripped to the downside on the NASDAQ 100. It's not a small trade, and it's been very easy to get jacked in that scenario, right? Not only that, but you look at that and you go, oh, that's open drive lower. I'm going to short the 50-60 back, and it ramrods you right back into the point of control. You think, oh, we're above the first 5-minute high. I'm going to go long and chase the long, and you get smacked down from 14,070 almost all the way back to 1,400. This is another 50-point rotation down. So when you see people going, well, I'm long the NASDAQ or I'm long a particular position, right? Two questions you should ask. Number one, what is their experience level? Number two, how much leverage are they using? And what's their goal as a trader, right? My goal is to pinpoint location and have this nailed down. For me, this spells utter confusion. The markets just don't line up. I can't tell if it's short or long or which one is. And if you can, kudos to you. I have no problem with the long. ES is fairly easy to tell by 9 o'clock that it was trend day up, right? But NQ was not all that easy to tell. If anything, it looked like it might have been in balance, really wide ranges, and it was all inside of locations that I would not have been very happy to trade on. That's the best way to put that. And so I didn't, right? And I want to say this as a coaching cue. It's really important that you look in the market and go, yeah, I have a pretty good understanding of what the market's trying to accomplish. It was pretty clear that ES was trying to accomplish trend day up, open drive higher. By 9 o'clock, you could tell that really clearly. By 9 o'clock, I could not tell that in NQ, and that immediately kind of threw the brakes on my entire trading. I don't like trading inside the prior day's point of control. It's just the chop zone for me. And my next location would have been this 14,160. That's my next, from a day time frame, that's my next location. And you can see we just simply never got up to that location. Not only that, but look how strong. You actually got a nice rotation down in NQ in the afternoon. But look at ES in the afternoon. There's just no... I'll show this so you can see it all together. Relative to how much the market was up, it had a 5-point rotation on it, right? So why take risk? And certainly to me, that was confusing to see ES be as strong as it was. In addition, we had two Fed speakers. I believe it was Bullard and I don't know who the other speaker was this morning. I believe it was the Fed chair, actually, speaking between 8 and 10 a.m. That makes trading really, really hard. So, again, to wrap up what my point is behind all this, the market likes to trade anomaly to anomaly. For my trading, I like all the odds to line up in my favor. I'm a greedy trader. And greedy in the sense that I want everything to line up, and I know that my opponent's in a weak position, and I have the ability to make money. That didn't set up for me today, and therefore I didn't make a ton of money day trading. That's all there is to it, and that's all right, because I killed it on Friday, right? Almost $10,000 in P&L on Friday, $63 today after commissions, and everything was done. That's about as good as it gets, right? So, at any rate, that's my 2 cents. For those of you who want, I'm going to do a separate video on setting up the zones here in just a couple minutes using the profile, and I will post that video. So this will go up in a couple minutes. If you look at areas that have yet to been tagged overnight, this would still be my upside target, this 14,160 to 14,170 on NQ. And in ES, my extended target up. Let's get to the end here and see where we are. This will not change. We either will find exhaustion near this 14,220 area or up in this 42.35 to 42.38 location. Those will be my 2 targets for tonight and or tomorrow morning. And what you're seeing when you look at this is range is really expanded. And hopefully this is leading to two-way markets and that's good. That's where we make a lot of money. Intraday, the market went away, and if I could say you had one skill set to recognize as a developing day trader is recognize when it's not your market. If day trades are your market and you trade balanced markets poorly, identify balanced markets and stay the heck out of them, right? But develop a specialty. If you'll read the Market Wizard books, you'll see that all those guys have a specialty. They got very, very good at just a few things, and they made a boatload of money doing that. And that's how you make a lot of money. So anyways, I'm signing off, guys. I will talk to y'all later. Have a great night. And thank y'all for listening. My name is Simon, and I'm with TRADEnPERFORM Coaching. Have a great night, guys.